Titan hasn't reacted quite positively, but the numbers were good. The studded jewelry segment did extremely well for the quarter. There was a sharp uptick in margins, and the wedding season in full swing also aided Tanishq's numbers. But most important thing was that the guidance is very positive. Nishant Sharma caught up with the CFO of Titan, Mr. S. Subramaniam, and started off by asking him about the jewelry segment and the outlook ahead. Here out.
No, the base is going to be a little tough always because it's been a phenomenal year for us. Something like a 24-25% growth in the jewelry segment, overall company 20%. So the base is always going to be challenging. But we've had this ambition of doing a 2.5 times X. I mean, our revenues of 16, 17. We've extended that by a year now. We are saying 17, 18 also we should grow 2.5 times in 5 years, which is the ambition we talked about for the company as a whole. But largely, of course, it will be driven by the jewelry division, which means that we need to grow at a CAGR of about 20% for the next 5 years. That would obviously also mean that the earlier years, we need to grow a little more than the 20% to be able to achieve a 20% because the base is going to get tougher every year. But what's happening in the industry gives us some confidence. There is the issue thing about GST, the organization, the unorganized giving way to more organized players. Issues like the Nirav Modi scam, for example, is something which is going to impact unorganized jewelers big time because getting funding for them is going to be far more difficult. There's going to be far more scrutiny from banks. And therefore, I think these would push, companies which are more organized to gain market share. And we've been seeing that over the last 2 years at least. So I would think, yes, those tailwinds are there. But it also means the company needs to deliver. We need to be able to give value proposition which is very attractive. And I think that's what we constantly trying to do. So over the last 2 years, we've brought in a lot of customer-friendly schemes. For example, the gold exchange program, which used to contribute something like 15% of the total gold we used to purchase till about 2 years back, which would today almost contributing 40%. It's become a major customer acquisition program. And that's because I think the gold exchange schemes that we have today are very customer-friendly. So while it means a little more cost to us, it does bring in a lot of customers. And I think it's a great way of growing sales. So I think, yes, the company needs to do a lot more other than just expect tailwinds which the economy, macroeconomic conditions are giving.
Right, and what's the contribution of studded jewelry?
Well, last quarter we did something like 36%, which is about a couple of percentage points more than what it was last year. Overall for the year it's about 30%, which if you ask me in the context of our focus on wedding jewelry, which is almost entirely plain jewelry, and the growth has been fueled a lot by that, to maintain a 30% share I think is phenomenal.
Right.
Yeah, so I think that's what is driving margins as well.
Right. And given the wedding season is also around, what about the planned collection in the premium and the economy category? What kind of expectation you have from the?
Well, we have this collection-based approach.
That's
every quarter we bring in at least like 1 or 2 collections. We've been doing this consistently for the last 2 years, and I think those collections are helping a lot in driving customer walk-ins. So I think that will continue very much.
Right, and what about the traction in the Golden Harvest cream?
Oh, that's been very good. The contribution of Golden Harvest last fiscal was about 14%. It's gone up to 17% in 17-18. We expect that to be ballpark 20% this year. So the traction on Golden Harvest has also been very, very good.
Right, and although the watches segment has recovered, the revenues have, come down.
Yeah,
what's really happening there?
Yeah, there's nothing wrong with the watch. In fact, it's been doing very well. What we did in the last quarter was a correction to the redistribution stockist. We wanted to consolidate, and it is also part of our cost control program. Which therefore meant that one, sales to them was low. Second, we actually even took back some stocks.
Okay.
So it typically happens during the end of the year when we do some corrections on the trade channel so that the next year starts well. So this is typically that. But if you look at the margins and the growth on a year-on-year basis, every quarter 4 Okay, we've done far better now. And what I would always advise is don't go by quarter numbers for any of our businesses, including our jewelry business. I think it's better to take a longer term view. The annual performance is more representative of what we want to do in a year. Okay, because if you take jewelry, for example, a quarter 2 and a quarter 4, where we have the diamond studded activation, the margins always tend to be higher.
Right.
Whereas in the other 2 quarters, it will tend to be lower. Therefore, one can't look at one quarter and say this is the margin I should expect, right? And the same thing works for watches as well.